Welcome back to PyUncut Finance, where we slice through the noise and dig into data to find meaningful investment angles. Today, we're putting the spotlight on MongoDB Inc., MDB. NoSQL database, cloud growth, AI tailwinds. It checks many boxes for a thematic tech play. But is the stock priced for perfection, or is there room to run? Let's unpack. We'll cover business model and competitive positioning, recent results and catalysts, valuation, analyst expectations, and downside risks. Is now a good entry point? Long-term outlook and scenario sketch. Bottom line, what type of investor this might suit. 1. Business and competitive positioning. What MongoDB does. MongoDB is best known for its open source origin in the NoSQL or document database space, but over time it's transitioned heavily toward cloud or managed services via its Atlas platform, Wikipedia. Its product stack includes MongoDB Atlas, database as a service across multiple clouds, enterprise and hybrid deployments for on-prem or private cloud, advanced features like analytics, transaction capabilities, vector search and embeddings, tools for migration, connectors, etc. By many accounts, Atlas is now the growth engine and crown jewel of the company. For example, reports show Atlas revenue growth of up to 29% year over year in a recent quarter. Investopedia. Moat and risks. Strengths and tailwinds. As more workloads move to cloud and as applications demand flexibility, NoSQL or document models often gain traction versus legacy relational DBs. MongoDB's multi-cloud support is an advantage, avoids deep lock-in to a single cloud. Momentum around generative AI, embeddings, VectorDB may open adjacent opportunities. Several analysts are positioning MDB as a play in embedding, data, and LLM infrastructure. Tip ranks. Share buybacks. The company has been repurchasing shares. In one quarter, it reduced share count by about 4.35% sequentially. Market beat. Challenges, risks. Profitability is still under pressure. Operating margins may compress, especially as the company invests aggressively in growth and R&D. Guidance sensitivity. MongoDB has historically issued conservative forward guidance. Surprises can hurt sentiment. Investopedia. Competition is stiff. From legacy relational vendors, cloud providers like AWS's DocumentDB or Azure's Cosmos DB, or other emerging database or AI infrastructure players. Execution risk in integrating the newer features, embedding LLM support, and monetizing them. Macro and software spending cycles. Tech CapEx cuts by enterprises could slow new deals or expansions. Overall, the business case has a credible narrative. The key is whether MongoDB can turn that narrative into consistently strong financial performance. Recent results and catalysts. Recent quarters and momentum. MongoDB has recently reported strong quarters. In Q2, the company posted one of its strongest quarters ever, with 29% Atlas growth, beating estimates and adding about 2,800 new customers. Investors.com. In the same release, the company raised its full-year outlook, signaling confidence in forward demand. Investopedia. Analysts quickly responded with target upgrades. For example, JMP raised its target from $345 to $375. Investing.com. Rosenblatt lifted target from $290 to $305. Investing.com. Some firms remain more cautious. For example, Macquarie raised its target to $265, but held a neutral stance. Investing.com. Moreover, the sentiment around the earnings surprise and outlook upgrade triggered a 30% rally in the stock on the news. Investopedia. So on the catalyst front, things are aligning. Good execution, strong guidance, re-rating by analysts. But risks from past guidance misses? It's worth noting that earlier in 2025, MongoDB's stock plunged 22% when guidance disappointed. Investopedia. That event still looms in the memory of the market, a reminder that growth stocks are punished hard when forecasts aren't met. Thus, while recent momentum is favorable, the company's guidance credibility is under scrutiny. Valuation and analyst expectations. Price targets and consensus. There's a wide range of analyst targets. Some highlights.
Stock analysis, average target around $343.91, approximately 9% upside. Stock analysis. Market beat consensus, $342.69, with upsides in the 7 to 10% range. Market beat. Tip ranks, $272.34. Some more aggressive estimates up to around $395. Tip ranks. Macquarie, $265 neutral. Investing.com. Rosenblatt, $305 after raising. Investing.com. So you'll see a cluster in the $300 to $400 band, with some more pessimistic or conservative estimates toward $260 to $300. Implicit multiples and margin assumptions. To justify those targets, the assumption is that MongoDB will sustainably grow revenues in the high teens to mid-20s, improve gross margins, already pretty healthy, expand operating margins, or at least control operating leverage, successfully monetize newer product tiers and features. If any of those assumptions falter, downside risk becomes material. Valuation risks and downside. If the stock is at or above many of its analyst targets already, depending on your entry, the margin for error is thin. A single quarter of underperformance or weak guidance could trigger sharp downside. Also, some forecasters, like at CoinCodex, caution more modest expectancies or even downside. CoinCodex. Thus, the valuation is not cheap. You're paying for growth, and the risk is whether the growth justifies the premium. Is now a good entry point? This is the million-dollar question. The short answer? Maybe, but with caution and staging. Arguments in favor of entry now. Momentum is strong. Recent quarterly beat and guidance lift signal positive trend. Analysts continue to upgrade, implying conviction. Technical breakouts may be forming. Some market commentary highlights price levels to watch. Investopedia. Partial position, you don't have to go all in. Deploy gradually with stop or hedge. Long runway. If you believe the long-term narrative is intact, cloud, data, AI, you might want exposure now rather than chasing later. Arguments for caution, waiting. The recent rally may have already baked in good news. The risk premium is lower. If you're a more conservative investor, you might prefer to wait for a minor pullback or weakness. Watch guidance. If MongoDB issues conservative forward guidance again, it might be a catalyst for a dip and an opportunity to accumulate. The tech software sector is volatile. Macro, interest rates, or policy risks could upset the trajectory. So my view? Now is defensible for a partial entry, especially for more aggressive growth allocations, but I'd avoid going all in at once. Long-term outlook and scenario sketch. Let's paint some plausible longer-term trajectories, 3 to 5 years, and what would make them come true. Base case, moderate growth. Revenue CAGR, say 15 to 20%. Operating margins improve slowly. MongoDB captures incremental use cases like analytics, embeddings, LLM pipelines. Stock returns of 10 to 15% CAGR plus optional multiple expansion. Bull case, strong execution, AI, vector adoption. Revenue CAGR 25% plus. MongoDB becomes a central data infrastructure provider in AI, embedding LLM stacks. Strong margin expansion. Multiple re-rating from, say, 20 times EBITDA to 25 to 30 times. Stock returns, 20 to 30% CAGR. Bear or downside case, execution missteps, tougher comps. Growth slows below expectations, margins compress, competition or commoditization pressures, guidance disappointments erode investor confidence, multiple contraction or valuation compression, flat or negative return over a multi-year period. It behooves the investor to watch key inflection metrics, customer additions, average spend per customer, margin trends, R&D results, vector, ML features, guidance discipline, and share count, buyback or dilution. Bottom line and investor suitability. Here are my takeaways, framed as if I were narrating on the podcast. MongoDB is an intriguing, high-potential name in the data infrastructure or AI infrastructure realm. The recent results and momentum give credibility to the narrative. Atlas growth, re-rating by analysts, and a renewed emphasis on AI-adjacent features are positive signals. But it's not without risk. This is a premium growth stock. Margins, guidance, and execution must hold up. You're buying some optimism here. If I were managing a diversified growth portfolio, I might allocate a modest starter position now, especially if I'm comfortable with volatility. If the stock dips or guidance leaves room for upside, I'd consider adding. I'd treat this as a 3 to 5 year hold or longer if the thesis continues to play out, not a quick flip. This is not for conservative income investors. There's currently no dividend and share price swings can be steep.